Welcome to the Fraser Coast Property Brief, the podcast where property, development and business leaders share what's really happening across the Fraser Coast. Each episode brings you insights into local projects, market trends and the people helping shape the future of our region. Welcome to another Fraser Coast Property Brief. Today we're moving beyond property and talking about some of the most important business and transactions depending on finance. My guest is Kodie Axelsen, Director of Finance Broker and Finance Broker at Co.
Yeah.
Is that correct? Welcome, Kodie. You're based in Maryborough, but you assist the clients right across Maryborough, Hervey Bay and across Australia with your expertise. You're involved in house, investment, home loans, commercial finance, business lending, financials for vehicles, trucks, plant equipment. So we're going to talk about finance broking, what it actually means. So welcome to the thing. Let's start, before we get into finance, let's find out a little bit about you. How'd you come to live at Fraser Coast? So I believe you're an Adelaide girl.
I am.
Yep.
I randomly ended up here, nearly 20 years ago, so almost half my life.
Yep.
I've been up here. My auntie owns a cattle farm, so I randomly quit my job in Adelaide and then called her and said, pick me up at the airport the next day, and I never ended up leaving. I met my then husband up here and then, had kids, bought a business, built a property portfolio. Yeah.
Your sister's up here as well, so you got a big
Yeah,
family.
I got two sisters. They're both actually
up here.
Yeah.
Yep. So I grew up in Adelaide as well. I don't know if you knew
Really?
that.
No, I actually did not know that.
I moved up here when I was about 17 or so.
Yeah, right.
So a bit longer than 20 years ago now.
Yeah.
So finance and mortgage broker, so they're two different things. So what does that actually mean? What is a finance and mortgage broker?
So I guess, most people would do one or the other.
Yeah.
I actually came into broking via plant and equipment.
Yeah.
So the trucks, trailers, earth moving vehicles and things like that for business. So not consumer, not anything for people personally or whatever. It was only for business transactions. And I did that for, I think, 2 years. I started in admin and then did all my qualifications and then bought in the home loan, so hence the mortgage broking. I bought that in within a couple of years. So the finance broking side of it, I guess, is an overall of broking.
Finance is everything that's not housing.
Yeah, basically. Well, I don't say I'm a mortgage broker because it's literally 50% of my business. Right. The other 50% is just general finance broking, so across asset finance and commercial.
Yeah.
So they are two very different types of finance.
All right, so let's get into the finance broking side. So what sort of finance do you arrange for individuals or businesses? What's the main core of your business?
Well, for me, I guess I find it difficult to niche in something specific in regards to finance, but I guess my clients probably more so niche in that with self-employed. So if you've got, an earth-moving business, you need to finance your trucks, your vehicles, your excavators, your dozers, all of that sort of thing. I do all of that. But I also do their property finance, like commercial and residential. Whereas if you're an individual and you're working paid for somebody else on wages, I'll do your vehicle if you come to me for it. I don't chase that business. Right. I don't particularly do a lot of that. But I'll do your home loans and everything like that.
All right. So when you purchasing vehicles, there's a lot of different types of finance you can get from hire purchase to chattels, mortgages, just straight leasing. What's the differences between those sort of things?
You don't see a lot. The only time I really see a lot of leasing is people that want to do sort of upfront payments. Yeah. So you can, if you need to access quick tax deductions within a specific year, you can actually bump up a bulk of your payments within a lease, but you don't own that asset. The bank owns the asset. So it doesn't actually sit on your balance sheet as such. You don't access depreciation because you don't own it. So it's just a different way to do things. There's not really that much of a benefit to it, I don't think, anymore. So you don't see many people doing it. You do see novated leases, very different type of finance. So generally like an operating lease or something like that. I'm also see that pagey people that work for the health department and things like that. You
Yeah.
see a lot of that REM survey sort of thing. Mostly now people self-employed will do chattel mortgages. So
Yep.
they own it, they claim the GST back when they've purchased that vehicle and they access depreciation,
Yeah.
which is your non-cash deduction. So you'll
Yeah.
get a lot of earth-moving equipment finance clients doing chattel mortgages because they're bulking up on that depreciation piece, which really reduces their taxable
All
income.
right. So, so Shadow's mortgage is probably the most popular at the moment. What's involved? We're just being cut out here for a second. What's involved in getting a Shadow's mortgage? What are you actually assessing to get the finance for?
So this is actually a good question because anybody can write a low doc car loan. You can do it. I can get them approved in 4 hours. Like it's not a hard piece to do. When you're getting in your bigger businesses where you're buying millions of dollars worth of equipment, and you've got a lot of chattel mortgages, a lot of monthly repayments, you need to know how to structure people's finance because you can put them in a very shitty cash flow position if you don't know what you're doing and you don't know how to assess business financials. So it's a lot more of a complex transaction. You need to understand that person's business and their cash flow, why they're buying an asset, what they're gaining from it, and how it's going to affect their plans and what they're doing going forward. Like a vehicle loan's very simple. We all know if you go and buy a car, it's an income producing asset, generally speaking. So,
So the lender itself, so you've actually got to take it to individual lenders to get the finance. So you go to multi lenders for either loans or thing. So what is the lender actually wanting you to provide on behalf of the client?
So it depends on the total exposure of that client to the bank and their ABN registration, GST registration. Do they have financials? You can do low doc applications, full doc applications. It literally depends on that individual transaction because each of them are different as to what bank you would put it with. If someone's overly exposed with one bank and they're not being competitive, I rate shop every single transaction. It doesn't matter if it's a 20 grand car loan or $1 million mattress shredder, which is something that I've had, which is a random asset.
It's a different one.
It is definitely. But
so what do you got to get from the client so you can actually assess them to know which bank?
Well,
is it their turnover? Is it their assets, cash flow? What's the
a car loan? Nothing. I need your rates notice. If you 2 years GST registered, maybe and registered and you own a property, I need nothing. I need to identify who you are, identify your business, what it is that you're buying. I need a tax invoice for that, or if it's a private sale, the details of the vendor. It's very simple to get a car. If you're in business, you don't really need to show a lot. So I guess banks have made it easier for there to be less competition and easier business. When you're getting into bigger transactions, you're generally going to have to show 2 years of financials, assets and liabilities. And on my side of things, I can go up to 500,000 low doc with specific banks. But I want to know that you can afford that too.
And credit history, is the score rating important for a lot of people?
I never pull on commercial transactions. I never pull people's credit file. Never really ever had to. People that are probably coming into this, it's like, there's a lot more people jumping into finance these days that probably really don't know what they're doing or have any experience with it. But you know your clients. And you're going to know what's an overview of a client. You can gauge it pretty quickly if they're people that don't know what they're doing. And they've probably had a bad credit history, or if they're decent business people, they're well asset backed, their credit history is going to be quite good.
All right. And what's the biggest mistakes business owners make trying to get finance? Get away from your car, just business finance.
I find cash flow is the biggest issue. People that either don't plan for what they want to do going forward and make some sort of shitty decisions along the way. Or a lot of the time with small business owners, not understanding how to read their financials. They don't know, they can't differentiate your net profit from what your expenses are with your loan repayments and everything, because there's actually nothing that really...
They see the cash in the bank at the end of the month.
100%, yeah. So I find a lot of the time I'm teaching people how to read financials, which is an odd thing to say when you're dealing with business clients, but it is not uncommon.
No, I've seen it a fair bit.
100%. So I guess that's why I love what I do, because I'm a bit of a middleman. I'm like, I know how to mitigate your risk. I know how to put you with the bank that's going to be best for you. But to sort of teach you what to do and what not to do along the way.
And how risky is it? Businesses, a lot of business fail in the first 12 months,
100%.
2 years. So is it a higher risk getting people loans within that first 2
Yeah,
years compared to
definitely.
a long-established business?
100%. It's much harder. I guess if you're buying a business, you've got something with a set of financials that are there that we can work off of. If you're going new into business, you've got to do a pretty in-depth cash flow forecast and a business plan, which I think people should do anyway if they're going into any type of business, but not many people do it. They don't really do that full due diligence. And then you find out later down the piece, like they go, oh, this business has got a really good net profit or something. I'm going to buy it for this. I'm like, but have you taken into account the fact that you don't have any cash up front or the loan repayments now they're going to take from that net profit? They just see money and don't understand exactly what it actually really looks like.
Or the 5 family members working the business is not on the
100%.
payroll.
Yeah. And it's all, I don't like the whole go into business, don't pay yourself a wage. I'm like, you are an employee of that business. You treat it as such. Like you have expenses.
Yeah. And if the business can't afford a wage from day one, it's not really business and you shouldn't be buying it anyway.
100%.
Because if you get sick and you're out for 3 months, that business needs to be able to work.
100%. Like I'm personally insured to the hills for everything.
Yeah.
Like if anything happens to me, things will keep running with flying colours. I'm like, you have to make sure you're doing the right things. And you can tell, you know what I mean? If someone doesn't want to do that or doesn't have the inclination to want to know more, you're like, should you be doing this? You clearly don't know enough or you've not done enough research. Or if I go away and say, you've got to do a full in-depth cash flow and business plan, and they're like, oh, I'm like, don't do it.
Yeah.
Especially people with families, you don't want to.
No.
I can write anybody business, but it's just not the thing to do.
So you sometimes tell people you shouldn't buy this business.
100%.
Yeah.
Absolutely.
Yeah. So, how many people do you see out there just trying to buy a job? Rather than actually buy a business.
And they don't understand that. Like, that's what I mean by, when you're an employee of your business, you want to pay yourself super. You want a decent wage. You go into it to make money.
Yeah.
I think people have this weird idea about it's kind of dirty to make money. I'm like, absolutely not. That's what you're in it for. Like, I'm sacrificing my family time to write your business.
Yeah.
I do want to make money out of that. That's a sacrifice not worth having on my side of things otherwise.
All right. So using finance strategically grow. So a lot of businesses, I see it in the real estate businesses where they might buy rent rolls and grow. There's a lot of other businesses and they want to grow by taking somebody out or lending a fair bit of money to get to the next step. What's the procedures and advice around that when you see people?
Yeah, I guess that's where, understanding what it is you're trying to achieve. If you can prove anything to a bank, if you believe that what you're doing is legitimately going to make you money, you should be able to show me the numbers then, basically. It's almost as simple as that.
Do people want to expand for the sake of expanding, or is it a lot of a strategic reason, or is it an ego in there?
I think, to be honest, to be a successful business owner, like, you've got to have a bit of ego, don't you? Like, really,
you got to have confidence.
100%. If you can't sell yourself, well, then what are you doing it for? But I think, well, again, it's basically that you've got to be able to prove it.
Yeah.
And, when you're going down the commercial route, it's more so like, who are you as a business owner? What's your history? What's your background?
Yeah.
Do you have runs on the board? Like, you say you're going to do this. I want to see the history. Have you done it before? Or, you know what I mean? Once you sort of have that behind you, like, it's much harder to get started if you don't have any of those things. If you've got property security and stuff, generally it's easier. When you're going unsecured route, like...
Yeah. And what's your advice to people, like I see it, they're in business, they got their own house, they got these things, then they use the personal guarantees from their private assets to secure the business.
It's generally going to be asked. Unless you have a lot of equity in your business, they're going to ask for a personal guarantee.
Yeah.
Like, it's just the way it is.
So they're not just trying to get a director's guarantee, they're trying to get beyond that and get a personal guarantee?
Oh, no, it'll be a director's guarantee. Yeah. But that's always going to be individual.
Yeah. All right. So mortgage broking. So how much of your business is mortgage broking?
50% of it.
So 50%?
Yeah,
so
50% asset from a revenue basis,
So you purely in housing or you're doing commercial? Or
commercial and resi,
So what's the main part of that? Is it just mum and dad just buying their own home, or is it investment properties, or where's your market?
I get a lot of that coming in the door.
Yeah.
So I get a lot of first home buyers.
Yeah.
I think probably for me, like I've built a decent property portfolio. Like I've lived the
Yeah.
first home buyer thing, the whole
Yeah.
building investment properties and buying commercial, I love that shit. And I think
Yeah.
people come to me because I know it and I've done it.
Yeah.
And I've sort of got that knowledge piece behind it. And I think I'm easy to talk to. So your first home buyers and things like that, they probably find it easy to get information. I do have a lot of people come to me like, oh, I went to someone else, but I just didn't feel the care was there or whatever. Like I really enjoy, guiding people, I think, because I've been there and done it. It is a scary thing. Like I had some first home buyers that they were on a really low wage. They were absolutely stretching themselves to do it. But they've come to me a year later. They've gained so much equity in that property. They were like, thank God we did it. And like, you let us. I'm like, you're never going to be pushed to do something you can't do.
No.
Is it going to be a little bit difficult and stressful because you've never done it before? Probably.
Yeah.
But I think it's a really good bet that you do it. Like, you know what I mean? And then it's the same with the business piece. Doing a lot of those transactions and helping. I love helping people make money.
Yeah.
It lights me up.
So when somebody's wanting their investment home, what sort of equity do you want in their first home before you start advising and get into the second one?
You probably don't want to go into mortgage insurance territory.
Yeah, so that's 80% or
yeah.
finance.
So you'd have to say
territory.
your own house would probably have to be 65% LVR, say.
Yeah.
And we'll pull 60% and we'll pull equity out of that to buy the next one.
Yeah.
So 80% overall between both properties.
And there's not much cash involved in it from the second.
Yeah.
But they'd be paying cash for the stamp duty and things like that.
No, you can fund 100%.
You fund everything, Yep.
Yeah, it depends.
Yeah.
It depends how the numbers stack. Like for me personally, like I've always bought things that I can cosmetically do up and generate equity in straight away.
Yeah.
It increases the rental return. It increases your equity position.
Yeah.
It decreases your risk basically as much as you can going forward. So it depends what the person wants to buy. You know what I mean? As to how much you suggest. Can you put cash in or can you gear up 100%? Me, I'd be put the cash into your owner occupied and reduce that debt.
Yeah.
Rather than
so it's not tax
put
deductible.
cash in, 100%. Rather, you know what I mean?
Keep the debt into the investment property.
Yep.
Right. So recent budgets turned the world upside down a bit. How's that affected your business and your market? Is it scared the market away on the investment side, or is it pushing it to a certain sector?
I just think people that are in a market to make money, they make money in any market.
Yeah.
You know what I mean? So you've got your investors are like, oh, now it's a good time to buy.
Yeah.
You'll be hearing a lot of people say that. The negative gearing piece has probably thrown people a fair bit, just trying to, I think everybody jumped on that way too quick. Like you had people doing stories on Instagram. No one even really understands this or has yet done any figures on it to actually. I honestly, I don't think they do.
Yeah.
The whole thing, I'm just like, this is ridiculous. And I wouldn't be surprised if another party gets in and changes the whole thing. So.
And there's you can still invest and borrow in your superannuation up to the 10th of August. So we saw a lot of people trying to jump on that straight away. And
I find the resi piece in SMSF, I kind of found that people just utilize that didn't have any other option, but they don't really know what they're doing.
Yeah.
So I was very skeptical on the people that wanted to go down that avenue because I'm like, do you realize you can't borrow money against that property to do it up or do anything?
Yeah.
So make sure what you're buying is a dead set, great asset. And generally speaking, like that was the class of people that were doing that didn't really know what they were doing.
Yeah, I found that, I sort of rush around and people trying to buy a property, and it wasn't about trying to buy the best property, it was just trying to get a tax deduction.
Just get a property. Yeah. And I don't think that's the way to go.
Yeah. And what do you think is going to happen over the next 12 months when the negative gearing, capital gains and all that's going to apply to new homes but not the established homes to get the 50%? Do you think it's going to push into the building industry and actually
that's
push
what they're
buyers into
attempting. That is what they're attempting to do.
Yeah.
So probably,
Yeah.
Like I do see that probably is going to happen, but you can't rob Peter without, you know what I mean? It's like
somebody's still got to sell their established house to for somebody else to get into the market.
There's always a counteractive thing happening over here when you're trying to do this. And the government is so stupid, unfortunately, at everything that they're doing. So I don't think they're looking at both sides of the coin, if they've even looked at anything at all in the decisions that they're making.
Yeah.
So I don't know. And you've got obviously the 5% first home
Yeah.
guarantee scheme and all of those sorts of things. Like, you know,
A lot of that's, capped at $750,000 houses, and
exactly.
our minimum house
Nothing.
is getting past that point already. So
Uh-huh.
it's becoming useless
Yeah.
as a tool.
But this is what they do. Like, they make lending harder.
Yeah.
And then they go out and they change another policy to make it easier. Like,
Yep.
then they go and do this, and they'll do something else to counteract it.
Yes.
AMP have just bought out a 40-year product based on equity, and it has to be interest only for 6 to 10 years for
Yep.
property investors
Right.
to help with cash flow. Like, that's going to go nuts, I think.
Yeah.
Like, you know what I mean? Everyone just then came in, and then they
Yeah.
made something else different. Like, it's just, I don't know. That's why I don't get too hyped up about any of it.
Yeah.
Because I feel like it's never as bad as what it turns out to be, because banks need to lend money.
Yeah.
And people need to make money for this country to thrive. So they're not going to make it that hard for everyone that you can't do it. Something will happen somewhere along the line.
And it's reporting week for all the banks at the moment.
I know.
So that'll be interesting to see what their profits.
Hold it.
Yeah.
Yeah.
So what do you think over the next 6 months? You think, that the Reserve Bank will actually hold interest rates or go up slightly, or?
No, I think they'll hold them today.
Yeah. And
I don't think, like, spending, like, it's not people's household income. They're not walking around making heaps of money, and that's what's making interest rates rise.
Yeah.
That's why it's like you're kind of pushing people beyond this point of affordability.
Yeah.
I don't think you can continue doing that.
Yeah.
And I think people these days, well, it's probably my Instagram algorithm, to be honest, that's throwing me all these things, but people are just making a stand against it.
Yeah.
They're really making it hard to make money in this country.
It is. It seems to be.
I don't know. We can go down a whole thing about that. It's just,
It's the Labor government policy.
Yeah.
To, try and stop the rich from getting richer.
100%. And all they're doing is creating a bigger divide.
Yeah. And just actually creates more people on welfare.
It does.
Rather than actually trying to get individual wealth and run your own retirement in the future, which was a lot of people were doing through housing products.
Yeah.
So, sometimes the results, we won't see the negative results for 10 or 20 years' time when people have stopped or are getting a massive tax hit, or, this supposed death tax when somebody dies and everyone's going to get hit.
They're just taking and spending. They're trying to pay back the money that they've spent.
Yeah.
Unfortunately, we don't get to do that.
No.
It is like, I can't remember, I've Googled the percentage of it years ago, of the percentage of businesses in Australia that are small business run.
Yeah.
Like, you're just crippling people.
It is. And that is the backbone of Australia. It always has been. So.
Definitely. So.
Right. I might just ask you one more question. So you're a business owner, you're a mum, you're active. I see you on TikTok doing a bit of boxing every now and again.
Yeah,
so,
without my frustration.
So, how important is fitness and balance of running a business and running a family and looking after yourself?
Yeah.
How hard is that and how important is it?
It's super important to me now. Like, my youngest is, he'll be 13 in December. Like, they're not around for long. You know what I mean? They'll be off. The other two are already off with friends and doing all these things. Like, I think, I spent a lot of my time, like, I've been in business for 12 years, but sort of 4 of that, I've had a lot of personal stuff going on. So I kind of just didn't put myself out there, because I'm like, I'll just keep doing what I'm doing. But I don't know, to me, that's super important.
Yeah.
You can't, I actually did an Instagram poll the other day of people being like, does your personal life affect your business life? And does your business life affect your personal life? Like, it absolutely does. I don't think. And as mothers, I think we do just naturally take on more.
Yeah.
So you've really got to find that balance to do all things.
And how important is the fitness? Is that get rid of frustration, or the fitness actually helps you focus more on your business? Or?
I've started training probably 4 years ago with Ali at Allied, like doing PT, like functional fitness. And then my mum got sick last year and I stopped training because I just had zero resilience. I was like, I just can't do it. I think, I was going through a divorce for the last 4 years, and it just kept me mentally.
Yeah.
I just had to move my body, not from like, and even not even just that, like skateboarding. I love skating. Like, on a shit day, I would get a beer. I would just be down the Esplanade and I would just go as hard as I could until my legs were shaking.
Yeah.
Like, it's just good. It is good for your body.
Yeah. Thank you and your sister like all the adventure sports.
Yeah.
Are you into motorbikes as well?
Well, now I'm an e-bike rider.
Yeah.
The motorbikes I've never really taken on. I love cars. I like driving fast and things like that.
Yeah.
But I'm more of a skater. I like the ocean. I like
Yeah.
going on surf trips and stuff like that.
Yeah.
More that than the motorbike riding.
All right. Thank you for coming along today. It's great to hear about your business and a bit about yourself personally. So
Yeah, thanks.
thanks for coming on
Okay.
Fraser Goes Property Brief, and we'll catch up with you again shortly,
Yeah,
and talk to you
excellent.
soon.
Thanks for
everyone.
having me.